Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, January 12th, 2022. It is right now it's 3:59. Well, 4 o'clock on the button. Closing bell just rang, so this is an end of day update, and I'm going to go over the equity markets. Just a brief update, but as things are moving, I'm going to keep these updates pretty frequent for the time being. I want to update Bitcoin. I've given modified the price targets on the Bitcoin futures. I'm going to go over that real quick. IYR and SRS, that was a trade idea I put out the other day on the REITs. The REIT ETFs. And coffee, quick update, only because I haven't included that in the last couple videos where I've hit on the ag commodities, and I had posted something recently on coffee. And then I need to do an update on natural gas. After the post today, when we hit that second target, I added some additional posts for both UNG, which is an ETN, tracks natural gas, as well as the February contract. I was earlier posting the March contract, so I need to go over that for those of you in that trade. So we'll do it in that order. Starting out here with the longest term chart, remember, this is the big picture. And one of many different trend indicators I use is this PPO histogram right here. That's the red and the green bars, and it shows when the PPO itself, this is the PPO down here, the PPO lines, when they cross, you get a bearish or bullish crossover. That's when the histogram flips from above and below the zero line. So when the PPO signal line is above the PPO line, as it was here, trends bullish. And so what the histogram tells us, and I've gone over this quite a bit recently, so I'm just going to do it real fast, that without fail, zero failure rate. We're looking at all the red crossovers, all the time it's crossed, as those crossovers have been associated with corrections ranging from, I'll read it here, 20%, roughly, rounded out to the nearest percentage, 20%, 29, 84, 18, 55, 16, 13, 26, 24, 31. So, one of the takeaways is, yeah, in a bull market, they're just corrections. That's what they are. 16, 13, 26, that's high to low. 24, all these are from high to low. 31%. So, you can call that a bear market if you want to, because technically that's the old school definition of drop of 20% or more. But to me, it's a correction and ongoing bull. Now, the takeaway is when the bull ends, then the bear markets were 55 and 84. Yes, that is correct. 84% drop. The previous bear market, we had one 2007 to 2009, and then the one before that was all the way back in 2000 to 2003. And so to say that this bull market, again, what I call it, is still, even with COVID, when you look at the chart, forget about the old school antiquated definition of a bear market being a drop of 20% or more, especially with each security. That's the thing, guys. It's security specific. When you look at something like natural gas, today it went up 13% in a single day. That's a one-day move on natural gas. And that the trends in natural gas are usually 50, 60, 70% or more. And you see those kind of moves that happen within a period of a year or so. You see those, again, so you look at a chart, and just this is the way I look at a chart. This is a bull trend, bull market. There's a bear market. This is a bull market. That's a bear. That was a bear market. This is a bull market. We're still in it. So where am I going with that? Well, just keep in mind, this is the, on record. If you don't count any of those as bear markets, this is by far the longest on record. And it would have died years ago, but the Fed kept it going. They just gave it a lot of juice, and avoided what would have been by now a certain, much larger drop with all the stimulus. But that's it, guys. The takeaway is we got the QQQ histogram has crossed over. Today is January 12th. That means we're a little less than halfway through the month, and so if you're patient and you're playing the long game here, not a very active trader. I do plenty of covering the short-term charts for active traders and giving you my thoughts there. But long-term traders and even investors want to pay attention to this chart. And again, so I'll be updating this certainly by the end of the month. And the way it works is, technically you have to wait till January 31st. But if somehow the markets reverse here, and let's say, another 3-4 days from now, a week from now, 2 weeks from now, we're here, or let's say we're here. And let's say we're there on January, way up here, we hit the trend line, because that's it so far, a successful defense of the trend line on the intra-month basis. Remember, we broke the trend line right there at the bottom of the candle in the recent lows. We're back above it now. But so all that matters is how we close the end of the month, and then how, more importantly, this one closes. So that's it. And so where I was going is, you can get into the 24th, 25th of the month, and if this histogram bar is solidly red, then it doesn't guarantee anything, but it tells you the odds. Again, look at 1, 2. Well, we're going back 1, 2, 3, 4, 5, 6, 7. Going back decades, 8, 9, 10. All those associated with drops averaging well over, take the average well over 25, 30%, and you do the math. If it hasn't happened yet, statistically speaking, it's going to happen soon. All right, so that's it. We'll see where that goes. And again, let's not read too much into where it is right now. We will, as the month starts to close out. There's that same trend line on a weekly chart, or my weekly trend line. Yep, off 2020's lows right there, and the low right here, I should say, mid 2020. And an intra-week break, and the week is not over. Today is Wednesday. Now we're halfway through the week, and we're a hair above it. So again, let's not read too much into this. If you're swing trading and you put on swing shorts on any of these objective short entries recently, you're still fine, you're still profitable, and there's still 2 more trading days left in the week for QQQ to either do this and get back down and close below there, thereby close a solid close below 378.86 will give me a check mark and say that it's going to increase the odds that we're going to go down and hit my deeper targets. Whereas if we continue to build on these gains and we park above there, well, guess what? That was a whipsaw, aka bear trap. That's going to help the bullish case. It doesn't mean the market's guaranteed to go to new highs, because you still have major resistance up there around 400. So that's where we are right now. We're kind of we are in what I call no man's land, and that is smack between support at about a little shy of 379 and resistance. So 60-minute chart. Something I didn't cover today in the update. I'll just show you the fibs. I talked about, retracements, and this is the Fibonacci retracement. So there was our last major reaction high, right, before we started this downtrend, the zig down. So when you measure on the Fibonacci retracement levels, you put a line from that top to the bottom there, and these lines right here, 1, 2, 3, are the 3 most common. There's other Fibonacci key fib levels, but there's the 38, 50%, and 61%. 61.8% retracement, and you can see so far this rally has stopped a hair shy right here of the 61.8, and it's really pretty much parked the day right on about the 50% fib. Just kind of eyeballing this, maybe a little bearish continuation, bearish pennant. I'm sorry, bullish pennant. We'll see if we break out and we start moving impulsively. Breakout in itself, it's going to be bullish. If it's impulsive on a volume, a solid move above the 61.8 fib, and I also gave you price levels that I don't want to see violated, and one of those is this 390, really where we stopped today. That's where I started the video this morning, and we kissed that 390. To me, it's a pretty big level. Again, doesn't guarantee anything if we take it out or don't take it out, but that's where I want to see the bounce remain below. And 393, that's really that's pushing it to me. If we take out 393 and solidly take that out, move above there, chances are we're just going to try to test or maybe even pop those highs. I still don't think it's going to happen. I still favor the downside scenario, but you can't get overly bearish when you've had a whipsaw, a false breakdown so far on the weekly chart and the dailies like that. So anyways, we'll continue to monitor this. Let's move on to the other stuff, and we'll wrap the video up. Bitcoin, obviously, I still like these cryptos. They, fell to my preferred buy levels I've been looking at for the last couple of months recently. And one of those levels right here, this is BRR Bitcoin futures. You can, of course, trade GBTC, or maybe you've got a Coinbase account or something else like that, and you want to trade raw crypto, whatever you call it, the coins themselves or Bitcoin directly. The futures are a derivative of Bitcoin. They're going to do a pretty good job of tracking the prices, but not perfect. It's not the same as Bitcoin Cash. And there it is, big positive divergence. So far, so good. I like what I'm seeing. It's nothing huge, but from the recent lows in the last few days, we've rallied about I don't know, 12% there. But what I've done, here's the update I wanted to give you. I had lines around these areas, but that was on the way down. They were support levels, but I've retasked or modified, changed these levels, and so I'm giving you targets now. If you're looking for just the first and my minimum target on the futures, that's 45, 645. And I added a second level here that's it's not as good a resistance, but it's decent, so we may get a reaction there. 48, 167, and this is still my current max target up here, max target zone, really about 52, 369 up to 53, 528. So that's where I think we're going most likely in Bitcoin. So look something like this. Boom. Okay. Alrighty, next up would be coffee, only because my last update was back here about a week or so ago, January 4th. We were short coffee. We had a divergent high here. Oh, let me get the chart. And I posted this on January 4th, telling you there was a bullish falling wedge forming, and although it just had broken below the primary uptrend line, you got to look at everything like this, and there was that bullish falling wedge with positive divergence, and so we were looking to likely bounce. That's where my arrow had it going. It's about up here, and that's about where we are now. So I wanted to say, if you're in coffee, if you took it long on the bullish falling wedge breakout or covered your short and you're looking to get back in, I'm not super confident on where it goes from here, but I'm going to extend that trend line. I'm trying to. Let me just draw it out with the yellow tool. There's that trend line right there, and that's pretty much what we're doing. We're back testing that trend line from below, and you've got a minor trend line here. So now you have a wedge, a little bit of divergence there, and so you could look for a short. I would wait for 235.56 to go, and then swing on down to the same targets I had before, 2.1793 and 2.0078, give or take, roughly. And if you did take the long on the bullish falling wedge breakout that was right here, I think I'd book profits right now. That's you're good for about a 9% bounce since the wedge broke out right there. And the breakout was impulsive too. It was everything you want to see. I think you can see it in the video. I'm going to zoom in nice and tight for you. There it was right here, this big, get the post out to you just before the wedge broke out, and then it went on to break out with that. That's what you want to see on a breakout. That confirms that, impulsive move on above average volume, ran right into that first resistance level, and it's taken that one out now. But like I said, you've got a little bit of divergence forming. You do have it, negative divergence, and so in that little trend line, so it gives you this like situation here that's set up. Okay, so that's coffee. Not one of my favorite right now, but because it was a recent trade idea and I hadn't updated it, I figured I'd do that for you. Last but not least, okay, I always encourage you, if you're a subscriber and there's a trade that you're interested in or currently in, check the site. When I post an update, quite often, if there's something to add to that, but it's not worthy of a new post, I don't want to hammer you guys with emails all day. If it updates related to the post, I'll post some additional charts or commentary, and I also answer questions under there as well. And that might be, a question that you might have had or didn't have, but now you see the question and answer, and it's relevant to your trade. So at the time we hit that, I'll get to the chart in a second. We hit that second target for 207 to the button. It was a quick 7% profit from the breakout point. However, and this doesn't happen often, but once in a while, that charting platform that I had queued in that chart to, when I queued it in, I always select the continuous contract. You type in the symbol, in this case NG, and it'll give you the all the nearby months, and it'll also say continuous. And I just select the continuous by default. Well, they rolled early to the continuous. It was a March contract I've been showing you, so I followed up with this to say, hey, by the way, for those of you who might have taken it, well, first of all, if you used UNG, if you don't like futures or don't trade them, then I give you levels on UNG. We had a divergent low recently, and that was comparable. Remember on the NG, I was highlighting this recent trading range, right? And it broke out. And actually, this one was a day earlier. There's your breakout candle Again, you can zoom in here. We'll do that. Zoom in, try to move it over for you. Nope, I can't do that. My apologies. Right now, the way I have the screen capture, I can't grab the bottom of that chart to move it. But there it is. So UNG, a nice little rip, and I gave you levels. 1587 was just above when I posted this earlier today, and I think that's going to at least cause a reaction, a pullback. And there's some potential additional targets, and I always say this, and I said it earlier today in that trade. If you there's nothing wrong with if you're long and you're holding out for those additional targets to instead of taking profits at a price target or resistance level, just hold on, raise your stops to protect profits, and let it ride. Quite often you'll be pleasantly surprised how far, especially something like natural gas, can go. So here's the chart of the futures that I posted under there. Again, I took these screenshots right a little bit after that, about 12:30 today, 12:20. You can see them time stamped. Let me grab that chart for you. This is it. So this is the February contract. This is the one still trading. And today alone, you can see in the lower left-hand corner, this is the live chart. It was up 13.5%. So whether you took it on the breakout of the March contract that I gave you or the breakout here, same story. It gapped up. You had a breakout right there. You back tested if you missed the breakout, and from that alone, you're talking 20. And that was yesterday. The breakout 22%. So here's the thing: you get 22% in less than 2 days, and you're at resistance. These are the levels I give you. This is a pretty big one. This is where I think we'll have a reaction. Plus, it's a what I call potential downtrend line. I know I use terminology different from everybody else. What a potential trend line is because it's not really, to me, it's not a confirmed trend line. Why? Because any 2 points, it can be connected at random. I like to see at least three distinct reactions. And so I think you'll probably get, if there's a little more upside, and there could be, you could overshoot this level, momentum fueled overshoot, and probably get a reaction off there. So that's it. So, you get 25% if that's hit, or you want to take it now, you're close enough, your price resistance, great. If you want to let it run, you can let it run, but you're probably going to have a pullback. If you get a pullback, where to? Well, 645 right there. That was a resistance level, but we went through it again on another term I've made up called a momentum fueled overshoot, and you have a lot of extremely strong momentum coming into resistance level, or when you're falling down to a support level, it's more than common to see that level act as resistance but briefly get overshot. And I always use that analogy of a catcher's glove in baseball. Pitcher cooks a 90-mile-an-hour fastball, catcher's glove, ball's gonna hit it at the point the glove's gonna snap back and then come back forward afterwards, and that's kind of the same kind of thing because again, it's the velocity or momentum going into there. So that's it. I just wanted to update that and tell you that is the contract, and give you these levels if that's the contract that you took, or if you took UNG. And that's it. Let me just see if I missed anything. No, that's all I wanted to update. I got everything else out for you earlier today. And so we'll wrap it up here and pick it up tomorrow and see what happens. If it's at Nasdaq, is it going to stay within that, the fibs and the horizontal price resistance levels we're at now? You know what, guys, it's not over. There was one more thing I wanted to cover, and that was that SRS iWire trade. I knew there was something missing. Somehow I jumped over that. It was supposed to be covered early on. Okay, IYR gave you as a short trade back. Here it was on Friday. Posted that one on Friday. Gave you this chart. Remember, when you click on the charts on this site, just roll your mouse scroll wheel, or if you have a touchpad, you can roll it. So we were at 111.24. We were just above the trend line. And I said you can either take it here aggressive or wait for the trend line to break. I still think it'll break. And so far, played out right away. We started going down. We went down. And I think, here, let me go back and tell you exactly where SRS was. Here, SRS was at 1287 the other day, and I gave you a first target of 1341. Additional targets, let me pull those up. 1287 SRS. Right there, so it went up and we hit that first target there. The first target was at 1341, and we were at 1287. I'll zoom in here. about the top of that candle right there. There's 1288, close enough. So we were good for hit that for about a quick 4.75% gain. Expected pullback. This is how trading works. This is why I list different levels. We hit it perfectly to that level and pulled back as expected, and so I believe we'll go on and whether soon and have the next leg up to hit the next target, and then maybe that second or third target there, 1588. And then on IYR, again, far from mere coincidence, we also fell down to perfectly tagged my trend line, not once but hit it both days. Look at those shadows, those candlestick tails. Boom, boom, and bounce. And again, as to be expected, the initial tag from above. Initial meaning not the first tag of that trend line period, or there wouldn't be a trend line. There were a lot of reactions on that line. It's very valid. I'm just talking the first tag, the initial tag in a while, and we get a reaction as to be expected, and we should hit the next leg down soon. Why I want to do the update, I'm going to look at a few of these stocks, but see that impulsive move. See all those red candles? I mean, when was the last time you saw 1, 2, 3, and a huge one there, 4, 5, 6 consecutive red candles? That's something different. And then you see an area of consolidation on declining volume. Well, that is a textbook bear flag continuation pattern. You can look that up if you're not familiar with how they work. You have an impulsive leg down called a flagpole. Then you have a level of consolidation, a small bounce on declining volume, and then as the name implies, it's a continuation pattern. In the measured target, you take the distance to the flagpole, add it to the lowest point of the flag, and then when the flag hasn't broken down, that's going to be your sell signal, or next sell signal will be a break below the flag, and ideally you want to see it impulsively. And the way these usually play out, and I love these patterns because they have a pretty good reliability factor, is you add the flagpole to the top of the flag and it gives you your measured target. Now I already gave you targets. My target's a little more aggressive, but being on that, based on this, and this is what I talk about all the time, the charts are dynamic, and so is my analysis, meaning they're developing. Nobody, there wasn't a flag back then, but now that we have that flag, I'm going to do this. I'm going to take the flagpole with this line, and then you can either duplicate that trend line or just drag it and put it right here, and you see it comes in a little bit shy, so I'm revising this now to my first target, and I'm doing that because it's the measured target of the pattern. And because they're impulsive, usually you see a pretty impulsive and equally impulsive move on the downside after the flag's broken. So we'll probably overshoot it, would be my guess. But again, why get greedy? Why shoot for, set your sell buy to cover limit order at 104.54? That's roughly the bottom of the flag. You're only getting another % or so, and so that's where I'd set the limit order if again you're only targeting that first level. If you think there's a much bigger correction in the market's coming, then IWire will go on to hit my current final target, which was way down here at 84.85. It's not going to go straight there, but it would look something like that. So there it is. I'm going to revamp these. Let me do it now before I forget. So covering the video, T1, 2, 3. You got it. T4 is going to be right there, and that'll be potential T5. And then before we wrap this up, since it's still a relatively short video, just a quick look at the top holdings. I have a watch list now. You can't see it on this off to the right of the video screen capture, but it has all the holdings of IYR and sorted by market cap. So this is the biggest one, American Tower Corp. Cell phone towers, that kind of stuff, I believe. And you can see what happened. It has big support right here. So here's what's going to happen, or what will likely happen. If this one, again, the leader of the sector, breaks that support. It's had numerous reactions on this level, a lot back here. I can see it's danced around that level a lot, especially that key reaction low there. And it kind of meshes with what we're seeing on the ETF. The flag is not as clear, the bear flag, but it is an area of consolidation after a sharp move down. So if we break down solidly below that, that's going to take the leader of the sector, at least the largest by market cap, down and probably bring it all the way down here to that uptrend line I have there. And remember, birds of a feather flock together. And we're also, remember, fundamentally, you might not agree with my technical analysis. Hope you do, otherwise I don't know why you're here. But if you don't, fundamentally, it's going to be hard to argue that REITs just don't do well. They do great in a falling rate in a low rate environment because REITs are a proxy for income investors. They pay a high dividend yield. They're usually steady eddy, pretty secure dividends. And as such, historically, they do lousy in a rising rate environment. And for the life of me, I can't, and I've said it with the market, I can't realize I understand how these REIT investors are holding out to the last minute. We know rate hikes are coming. It's not a matter of now if they're coming, but when and how much, how fast. And so, well, obviously, that's what happened last week. I think it kind of people finally realize, okay, easy money Powell, he's still way too easy in my opinion, and some others, based on where we're at with the inflation-adjusted returns and all that. However, you look at PLD. This is number 2 in the sector. Beautiful bear flag. That doesn't guarantee it's going to play out as such, but if it does, it's going to take us down right here. And look where the measured target comes in, just a hair below that 139 support, major reaction high right there, and then a breakout above it. So you came up, tested the high for 3 days right there, and then boom, big green candle. That shows you that that level was significant for traders, because when we took it out, it happened on a big green impulsive candle, and then nothing but buying to follow. And now, boom, this is what a crowded rush for the exits looks like. And from the top on December 3rd down through January 10th, and that's just 6 trading sessions, this stock fell, I've got to get that back on there, 11.83, 12% drop. Okay, so you can see what happens when you get a crowded rush for the exits, and we could see that at any point in the stock market as well. We started to see it recently, but so far the buyers stepped in and bought that dip. All right, I won't go over each and every one, but you can see similar things. EQIX, another one of the top largest components, same thing. Bear flags across the board right here. That's the bottom line, the theme of this video in the REIT sector. So I still like that trade, and if you're in it or if you're not in it, your next objective short entry is going to be on a break of the flags. If you want to be safe, wait for a break of the recent lows. They're not that far below, because a break of the recent lows will have certainly taken you below the bear flag, and it will also have taken you below the primary trend line on the main sector ETF, which is IYR right there. Okay, guys, that's it. We'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great evening.